everyone, and welcome to this week's installment of Mish's Market Minute on StockCharts TV. I want to get into a little bit about electric cars. Not so much because I think they're the best buy right now as the market is under pressure, but mainly because they've been such a huge topic of conversation. And as a sector, represent the pluses and the minuses of everything that we're seeing in the macro. So I figured we'd take a little bit of a look at some of the impacts the macro is having on electric cars, and then we can look at not only cars themselves in terms of the symbols, but also some of the ancillary things that have to do with it, like rare earth minerals, and also some charging stations. So let's get started.
So when we talk about the macro, based on what we're seeing in the whole EV space, I think what was so interesting was Cathie Wood came out and said, not that she is certainly the arbiter of anything considering ARC is getting smashed again, but she did say that she would consider General Motors, and we know that she's already a big holder of Tesla. What I thought was interesting about that is that really General Motors is selling cars rapidly and actually sell more cars than Tesla. Tesla's big, of course, advantage is it's not just a car company, right? It's got software and servicing, and of course it's Musk and all of the stuff that surrounds him. But nonetheless, it makes me want to look at General Motors, particularly after earnings and if the market starts to stabilize. When it comes to Musk and Tesla, the only thing I really want to point out is two things. One is, as you'll see in the charts, it's the only one that's actually still in a bullish phase of all these EVs and most of the charging companies as well. And it also kicks off earnings. So I'm talking to you, this will be in about a week, in a couple of days. So that's something to look out for. The biggest issue, the negative headwind for EVs, is the supply chain disruption. So not only are we unable to get cars delivered. I went to actually a store in California that sells an EV version of the Volvo. And they said, oh, you're looking at 3-4 months, because they're impacted by not only the disruption in commodity prices, but also in labor, et cetera. And I think it's interesting to look at the charging companies because clearly you can get an electric car. And here's the classic story. If you live in a state like I do in New Mexico, if you have a Tesla, you have more of a shot after you leave the big city of possibly finding a Tesla charging station. But if you have an EV that does not take Tesla or cannot be charged with Tesla, and you get out of a city and you go on a road trip, you could find yourself with no place to charge. And number two is if you do find a place to charge, it could take like an hour. So these charging companies and the whole infrastructure is just not ready yet. And then finally, the positive side for EVs is the fact as we start to see oil prices increasing, and as I'm talking to you, they got up to about $106, $107 a barrel. People are saying more and more they want EVs. So they want something that's not perfect, isn't necessarily always easy to charge, and right now is probably at about a 3-4 month backup. So there you go. It's about as controversial as you get. So here is, and of course, inflation affecting the rare earth minerals. So these are the instruments we're going to cover. So let's go to the charts. Okay, so let's start with USO because clearly there's been surveys done that have said that if oil goes higher, more and more people are going to start to look at EVs. I've got USO here just because it's an easy chart to look at. It represents obviously the United States reserves, but the United States reserves are also not so plentiful as one would think because we didn't drill for so many years. So they're limited. And if they start to get scarce, along with everything else that's going on, those oil prices can go from 106, $107 a barrel to much higher, which would also force the hand back to EVs, even with all the frustration that we have seen in that space. So right now, We're looking at obviously great leadership here against the benchmark. And in terms of the real motion, we're seeing some momentum here. If we clear the Bollinger Band, we haven't been above that Bollinger Band since back here. And look what that happened. Even though the momentum started going flatline, the Bollinger Band was going straight up, as so was the market. So what you want to see now is this to clear the Bollinger Band on our ACP plugin real motion, which you can get at StockCharts. And at the same time, probably see this clear the Bollinger Band here on price or over 82.10. If we move on to SLI, this is actually a different way to look at lithium. It's actually been under some pressure. It's between the 50 and the 200. It's showing basically on par. In terms of the momentum, though, you can see it's still under both of the moving averages, both the 200 and the 50. And so the momentum hasn't been that great, actually a little bit more negative than the actual price. So with lithium, considering the whole market is under pressure, this is still doing okay because it's in a recuperation phase, but not okay enough for me to say, go in and buy it. So I would probably say, wait for it to get over 8. And if it breaks down under the 50, you might have another opportunity to buy it, say between 6 and 5. The next one is MP, one of my favorites. And MP, of course, had this huge move up, which we expected, but now it's come off with the market. It's actually starting to underperform the benchmark, and it's under the 50. So we have a negative divergence in momentum. So if you were all sad that you missed the boat in MP, you will get another opportunity. That's the good news. And I think you'll get that other opportunity as we get closer, somewhere between 45 and 46. That's what I'm waiting for. Now, the next one is a charging station. It's BEEM. And BEEM right now is a very interesting chart. We're not quite through the 50, so we are getting a little bit of a negative divergence. We are, though, performing very well against the benchmark. But more interestingly, we've been in consolidation here between 2070. That's a big range, by the way, and 26.10, $6 range on a $20 stock. So at this point, if it takes out 26.10, and again, I would check my earnings, you probably would have a pretty tight risk, say, to under this low or under 23. $3 risk I could handle on this one. Now, if we look at Mr. Tesla, Mr. Musk, all over the news, you can see that Tesla also had this big run up, and now, of course, has come off with the market. This reports April 25th. I'd be extremely cautious about doing anything other than day trading this stock until after we get through the earnings. Now, it is holding on the 200, but then again, it's over the 50 and under the 50 on momentum declining, leadership even declining. So if anything, to me, this smacks wait. And the next one is NIO, which recently got an upgrade. And that actually looks like an interesting bottom that it had back here. And now you have had another kind of dip down, but hold with an inside day forming under the 50. Leadership on par, momentum basically not too bad, but it could get even better. So this is a very simple case of if NIO is going to be good, A, the market probably would have to actually behave, but 2, you'd want to see 2 closes above this 50-day moving average, and then you could probably risk pretty tight. The next one is General Motors, Miss Kathy Wood's new consideration, except there's nothing to consider here just yet. It is showing some leadership, and momentum isn't too bad. In fact, momentum is in a positive divergence, which is the most interesting thing. But we did not have that classic reversal pattern here, in that we got the new low, and the next day it either had an inside day or closed above the high of the day before. So that tells me that this could have more downside, but I would be very keen on watching this one after reports to see what happens. And then, of course, we're going to go to Ford, which is releasing its new truck next week. That was enough to get Ford to be green on the day, but the highs it's come off from, of course, again, with the pressure of the market. So right now, to me, this looks like a mess. Again, not a legitimate reversal pattern. Interesting divergence in momentum. It's got that going for it. But remember, momentum is just one part of it. It also has to show us in price. By the way, good leadership on the SPY. So it's got 2 out of the 3 things going for it. what price would I say, okay? Well, look at this. What's happening is the 50 is starting to converge with the 200, which means this is about to go into a death cross. So really, you could have a rally up to these moving averages. You can even surpass the moving averages. I would actually almost say at this point, I would not want to buy strength in this stock. Rather, as it's entering a bearish phase, I would rather look for some kind of a blow off where people just get out of the stock and then we see a reversal. And that to me would be probably the most interesting at around 1250, which would be very cheap for this stock. Then we have Apple. Now, Apple, I'm showing you because Apple's been trying to make electric cars. They're trying to get into the game, but Apple's having its own problem. Talk about chip shortages. That's one of the problems. Talk about China shutdown, another of the problems. So the car thing is not saving them at this point. However, interesting to look, it's breaking down under the 50. Still showing great leadership, but momentum is starting to look pretty negative. So with Apple, I think we're going to probably see more south side. If the market stabilizes, well, let's say 150 right now is a big area. If it breaks 150, we'll have to look for a whole new place for this to hold. If it holds 150 and the market finds a floor, Apple might be one of the first places I would go because it's Apple. Now, BLNK charging station is another one. And again, holding up better because it's on the 50-day moving average, but under the pressure of the market on par leadership momentum, not so much. So this could go lower. However, I would watch for the earnings on this because this could be an interesting buy, considering if you look at this, where it peaked and where it had its nadir, we're like at around 50% is where it retraced to and came back off. So I would say if this can hold around 20, that would be a good sign. And clearly, if we can get back over 30, clear sign. Between 20 and 30, probably a chop fest. Now, Nikola is one I haven't looked at in a while. And this also is coming off. Look at the momentum here, not great, not showing any leadership at all. And did not have a good reversal bottom. So all these stocks, what these stocks are telling me is they could be making new lows. And if they make new lows, maybe then they would become compelling. What would make me change my mind on this one would probably be momentum divergence. That's why I like the General Motors. At least it has a momentum divergence. This one doesn't. So next is Workhorse. This is also cars. And you got to see here breaking down under the 50. I mean, none of these look great. For the big future of electric cars, it just goes to show you that having a macro trend or a mega trend, however you want to call it, is one thing. Having the ability to read a chart and time your way in is another. Hello, Kathy Wood. So right now, to me, none of these look like great investments at this point. But it is interesting to note that if you want to go short, some of these might actually be a good short, particularly if the market shows greater weakness. And if you want to go long, I would keep them on your radar. This might not be a bad one because it did have a legitimate reversal bottom here. Next day eked out a close above the day's high. So that means your low of this day right here, which is 258, should be a floor. We'll see. Now the next one is XPeng. This is a Chinese car company. Now we know China's had its own host of issues, but momentum is not too bad here. It's actually showing a divergence as it's showing leadership. And you had this gap up reversal bottom. So we like that. But because you see, this was an inside day or just about an inside day. However, it hasn't really wowed us here in price. But this is definitely one I might keep on my radar, even if it is a Chinese company. Maybe if it gets back over 32.50 at this point, though, right here, we're sort of in nowheresville. Now, CHPT is another charging station, ChargePoint Holdings, and that recently did very well and now, of course, has come off with the market. But this is one, again, just to put on your radar. If you want to buy charging, if you get an infrastructure package finally going, if the economy doesn't go into a major recession, if the bonds sell-off starts to abate, there's a lot of ifs here. But if, these are some really good ones to put on your radar. They're always on my radar. Right now, as we're breaking down under the 50 and going back into a distribution phase, I probably wouldn't touch it. But If we can make new lows and then turn back around, that could be interesting. And then Rivian, best part about Rivian is I actually saw one for the first time. I gave the guy a high five. No issue. And here we had a good bottom. We're consolidating above that. Our leadership is meh, but our momentum is improving. Rivian, you know, people say, oh, well, they're hardly making any Rivians. But at this point now, obviously you should probably wait for earnings, but if you can get back through 44.90 to 45, might be an interesting play. Let's see what happens. Or you could wait for it to get back over the 50, because look at this 50-day moving average. It hasn't traded above it yet. That's probably the best thing to do. And now we also have commercial vehicles. This is Proterra. So this is more in the electric truck space. I like this chart. You got kind of triple bottoms here. You got your momentum indicators positive, showing a positive divergence, and you're showing leadership. I don't know what kind of volume or liquidity this stock has, but this would probably be the first one of everything that I've mentioned so far that would be on my list. I would certainly be looking to see what happens here with earnings. But nonetheless, if we can pierce through for a couple of days the 780 level, then, or even 8, if you really want like round numbers like I do, then I think you might have an opportunity to see this thing go higher. And if you risk pretty tight, you can even start taking profits before it gets to the 200, leave some on to see if it can actually clear. So that one gets the gold star. Lucid Motors. Double bottom potential, but it doesn't have the momentum in its flavor, or favor. And so to me, it looks like this could break down under 20. And if it does, it'll go lower. Right now, the momentum, if it starts to improve, maybe I would keep this on my radar at least to see if it gets back over 25. But for now, you can see for something so hot, chart-wise, not so much. Now, QuantumScape is another one that's interesting. Chinese, I believe, and this is over the 50, showing leadership, but under the 50 on momentum. So the momentum is not great, which means this could eventually roll over with the market and break down under the 50. But if it doesn't, and we start to see any kind of improvement in momentum here, like it clears back over the 50, then I want to say if you wanted to find a kind of good midpoint for it to clear, I would say it really has to get back over 20. And it has to definitely hold right now the 50. If it breaks down under the 50, we'll have a fresh look to see if these triple bottoms hold up. And if it doesn't get down under the 50 and starts to move up, I would take a small position on 20, add over that 200-day moving average. So QuantumScape and these two, interestingly enough, the best one. Now let's look at LI. This is Li Auto, another Chinese one. Chinese ones all had this big gap. Leadership, momentum, not so great. So same kind of story. Momentum has to improve, and this has to clear that 50-day moving average as well. And I'm going to end with another charging station, Plug. And I like this one. I mean, I just like this company. This company had some fireworks over the course of the last couple of years. And when it moves, it moves. So it's got a lot of speculative interest. But right now, it shows no interest to me because the momentum is declining. It's getting a little bounce off the 50, but it looks vulnerable to the market. So again, at this point, I'd almost rather buy the strength. Get out right away if you're wrong, which would mean a couple of closes over 28.40. Or if it breaks down under the 50, see how you have higher lows, a low, a higher low, a higher low yet. If it holds this 21.27 level on this next dip, even if it breaks the 50, then at least you would have some good chart point to risk against if it starts to hold.
Okay, everyone, that's a wrap. I hope this was good information. Don't forget, we're also going to be in earnings season. So some of these cars will be reporting, kicking off probably, I think, with Tesla. And in the meanwhile, I hope you have a wonderful long weekend. Thank you so much for watching, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.